Hi there, my name is Pete Hackleton. I'm a tax partner at Safri Champness and head of the Sports and Entertainment Group. We're here today to talk about image rights in football. I've been at Safri Champness for nearly 10 years, been a partner for the last 9 years, and we work with around 80 professional footballers in the UK, managing all aspects of their tax affairs, from their basic tax return and compliance right through to their image rights structures. And other complex areas like the taxation of benefits in kind and agents fees. But as I said, image rights is the focus today. And what we plan to run through is the background on the tax aspects of image rights and how that works, why clubs will engage with players and their image rights companies and other commercial partners, and then how in practice the various rights work together in order to make sure that all the players' associations can have the appropriate use of their image. So first of all, I'm going to pass on to my colleague, Reese, to run through some of the basics.
Hi, Reese Linnell here. I've worked with Pete for the last 3 or 4 years in the Safri Sports and Entertainment team. Looking at image rights or commercial income more generally, I just want to strip back to the basics before we start. So football players are generally what we're talking about here, but rugby players or other employed sports also relevant. For playing income, players, and I'll refer generally to footballers in this instance, are employees of clubs. So Kevin De Bruyne is a Man City employee, Roberto Firmino is Liverpool Football Club employee, and they're paid by their employer through salary and through payroll, just as most people or most employees are throughout the UK, just as I am by Safri Champness. Now, that tax is withheld at source and paid on to HMRC. Depending on your tax code, that should be the correct amount of tax for you to pay. For any individual who earns over £100,000 a year, you need to then also fill in a self-assessment tax return to essentially check that you've paid the right amount of tax. And it's taxed at varying tax rates. For anyone who earns over £150,000 a year, your marginal rate of income tax, i.e. the tax you'll pay on an extra £1 of income, is 45%. And that's the tax rate we'll use here, as that's the tax rate that applies to most footballers in this position. Now, commercial income, you'll see we've got 2 pictures here, one of Marcus Rashford in his Man United duties, for which he's paid as an employee, but then also a picture of Marcus Rashford working for Burberry. Now, that commercial work that players do is a self-employment. If they don't want to do any commercial work, they don't have to. If they want to and they pick up deals, then obviously they can. And then they invoice for the services performed for those companies pay those invoices as normal, and then there's no tax withheld at the source, no PAYE liability, because clearly Marcus Rashford isn't an employee of Burberry. Now we've established that Marcus or any other player is self-employed, there's options about how you trade as a self-employed person, just as there would be for your local accountant who works for himself, or your local plumber, builder, whatever it might be. So if a player chooses to trade as a sole trader, they're subject to income tax on any additional income that they earn. That income tax will be payable at 45%, and they pay that income tax through a personal tax return, just as John Smith Plumbing or Steve Brown Building might do. Now, your second option, how to trade as a self-employed individual, is through a company. So you set up John Smith Plumbing Limited or Steve Brown Building Limited and effectively run your own business through a corporate setup, which I think is what Tom has alluded to previously. That company is its own entity, which again, Tom will run you through the kind of protections that gives players. But more importantly, from our point of view, corporation tax rate at the moment is 19%, which is obviously substantially lower than the personal income tax rate of 45%. there's a bit more to it than that, in that when players want to extract funds from that company, there's generally further tax to pay, whether that's via salary to themselves as an employer or employee, or director of that company, whether that's dividends as the shareholder of that company, or whether they extract funds from the company when they wind it up. And we'll talk a little bit more about that on the next slide. There's also some additional costs of operating a company. The first being that Tom's talked about, the assignment of the right to exploit your image across to the company from yourself personally. Now that brings with it legal expenses of assigning that legal right over. There's also typically valuation expenses for valuing the asset that you effectively own personally and the assignment of that asset over to the company. Once the company's going, you then also have company accounts, corporation tax returns, company secretarial work, and additional legal filings that the company needs to make, which obviously you wouldn't do personally. Now, at the levels typically we're talking about of a Premier League footballer, the tax saving involved in operating a company and then not taking much of the money out of that company obviously massively outweigh those additional costs. And those additional costs are also tax deductible in the company, which slightly reduces their effect. Over the life of the business, that company will generally build up a substantial amount of funds. Options of what to do with those funds. Some players loan the money across to a property company, which they then run and use the funds in that company to invest in different properties. Now, it's important, without going into too much tax stuff, that is a loan rather than the image rights company investing in property, just to keep the trading nature of the image rights business to attract entrepreneurs relief if you wanted to wind that company up in the UK. Now, depending on where you're going in the world, you might wind that company up in the UK before you depart. So if you were going to France, where perhaps image rights aren't recognised as much as they are in the UK, and that company would be of no use to you, you would probably wind that company up before you go, benefit from entrepreneurs relief at 10% tax rate on the first £1 million of value that you're extracting, and then pay capital gains tax at 20% on the remainder. Now, there are some countries, Monaco would be a prime example and the most high profile example, where there's no income tax. If you were moving to Monaco and staying there for a decent chunk of time, you would probably wait until you get out there and then extract the funds once out there, because the tax liability for extracting those funds once you're not UK resident and you're resident in Monaco is much more favourable. Similarly, if you were going to Italy, there's now tax rules in Italy whereby you can pay £100,000 a year and only pay tax on your Italian income, similar to the non-domicile regime here. And the extraction of these funds wouldn't count as Italian income. So you'd effectively pay £100,000, which, if you're extracting £4 or £5 million from an image rights company in the UK, is obviously a pretty effective tax rate. The other option is the company just carries on with you. Now, once players have retired at 35, 36, 37, whatever that might be, all of a sudden their marginal rate of tax might not be 45% because they might not have any other income. Then they can extract funds from the company through dividends or salary or whatever it might be over the rest of their life to supplement their lifestyle. That's a little bit about how the company builds up money, the tax they pay, and ultimately how they get those funds out of the company. Pete's going to talk to you a bit more about what comes in and the income that these companies earn.
Thank you for that, Reese. Just one thing, just to pick up there on the end, I think you're absolutely right. In terms of the extracting funds, that's always something that we need to bear in mind. And quite a lot of the negative coverage around image rights companies in the past has featured on, players have set up this company to generate income, and then they're using the cash in there and paying no tax. There's a headline on the BBC going back 8 or 9 years. You can still find it with a Google search, talking about Wayne Rooney paying 2% tax on the money in his company. What they were actually saying was that Wayne Rooney had loaned the funds from his company, And the rules at the time said, effectively, if you loan funds from the company tax-free, you have to pay tax on the benefit in kind of effectively what the interest rate would be were you to borrow that money from a bank. So benefit in kind at 4%, 45% tax rate, an effective tax of 2% per year that he was paying. But he wasn't taking the money out of the company. And at such point that he did take the money out, he would have tax to pay at that point. So there will typically be a cost to extracting those funds. But the wider benefit that we always see is, going back certainly 10 or 20 years, there's an increasing trend of footballers hitting financial difficulties post-career, and saving during their career can often be difficult. So to have this pot of funds that you can't extract without suffering some tax costs, so players typically try not to touch it, is a really nice way of building up a long-term pension pot that the guys are going to need, because quite often retiring at 35, you've got 50 or 60 years of life to live, and probably your earning prospects go down considerably because not everyone's on Sky or managing Liverpool. So we think it's a really helpful tool to help players prepare for retirement, and with funds that are taxed at 19%, so can be affected at the gross amount of invested can be quite a lot higher. So just moving on to the clubs themselves and why are clubs entering into image rights agreements. I mean, effectively going back to the late 90s, early 2000s, some of the early cases that I was involved with, what had happened was image rights started. So it started with a sports club case in the UK. The first two players to use image rights in the UK being Dennis Bergkamp and David Platt, who joined Arsenal summer 95 from Italy. Image rights have been very popular in Italy previously. These were the first cases in the UK. HMRC challenged them and the players won. It was found in the players' favour that the companies were genuinely set up. Contracts entered into by the companies were bona fide commercial contracts. And HMRC couldn't simply argue that this was a form of disguised remuneration. It was separate. This was the players carrying out a self-employment. So the clubs were entering into agreements with the players' image rights company because they wanted to use that player's image alongside the employment agreement. And I think what happened over a period of time was clubs started to bring in image rights agreements routinely. So for every player, and in reality, they were using a lot of that imagery. And secondly, the amounts that clubs were paying as a proportion of the overall package for the use of image rights became disproportionately high. Obviously, there's a tax advantage to the player, and equally there's a tax advantage to the club because the image rights payments are not subject to employers' national insurance at 13.8%. So over the course of a squad, that can be quite a significant saving for the club as well. So huge numbers of enquiries all through the early 2000s. HMRC gathering reams of information from every player and every club. And in 2011, HMRC offered a deal to all of the Premier League clubs to settle all of the historic image rights matters going up to 31st December 2010. And our understanding is only one of the clubs didn't do that central deal. All the rest of the clubs did the deal, which effectively was to pay a proportion of the tax that would have been due had all of those image rights contracts gone through the payroll. And it was just a way of shutting down those enquiries, HMRC feeling that they'd had a bit of a victory, the clubs feeling like they'd settled all of this historic tax enquiry issue, and everybody then free to move on. And what happened at that point was quite a lot of the clubs decided they'd had enough and they didn't want to use image rights anymore, which is probably what HMRC intended. But a good proportion of the clubs, usually those bigger clubs with huge numbers of commercial partners, who decided we still need that access to the players' imagery, and I'll come on to explain why they needed that. And they continued to do it. So in around 2014, a new deal was entered into between HMRC and the clubs for 3 seasons, which effectively said, as long as you keep to 2 parameters, we won't ask any more questions. And the parameters were, there was a club cap, the tier 2 cap, which effectively said you as a club can make total image rights payments across all of the players' image rights companies of up to 15% of your commercial income. So if you were Chelsea and you had commercial income of 120 million, you had a total pot of 18 million that you could pay to the image rights companies. And then that was subject to meeting the tier 1 cap, which was a player cap, which said the maximum that the club can make payments to the players' image rights company is effectively 20% of their salary. So if you had a player with a salary of 4 million a year, 80,000 a week, the most that you could pay to the image rights company would be £800,000. And that was slightly nuanced from what everybody used to understand the cap to be, because everybody used to talk about it as 20%. You can pay 20% to the image rights company. So if you got a deal of 5 million a year, then 4 million salary and 1 million image rights, that would not have met the new cap. So it was a slight difference on the old theme. But as long as you kept to those caps, as long as each of the players receive an image rights income, was doing up to 3 activations a year, one of which could be a tweet, then HMRC were happy. The payments were not substantial or too substantial in the context of the employment income, and the rights were actually being used. We won't get into, I think, the offshore image rights companies today. It's a bit more involved, but historically, players moving to the UK quite often had offshore image rights companies. HMRC are really against that and currently looking to take some court cases against it. Technically, it does still work if done properly, but it's clear that HMRC are going to take some action if you go down that route. So in terms of the clubs and the use of those rights, what are they paying for? Well, we've got on our slide the standard Premier League contract definition at clause 4.6, and I'm just going to read that through, which says, player hereby grants to the club the right to photograph the player and to use such photographs and the player's image in a club context in connection with the promotion of the club, the manufacture, sale, distribution of club branded and football related products or services in relation to the league's licensed products. So under 4.6, the club have the access to the player's basic rights. We use them in imagery in the club shop. We can use them in all of our club branded merchandise in terms of selling the kit. That's all covered under the contract. But under the standard Premier League contract, the restrictions are that the club can't use the player's image more than the average of all first team players. You can't use the image to effectively imply any product endorsement. And the player can't personally exploit their image in a club context or to promote other brands competing with the club. So further down the Premier League contract, clause 4.11 reads, nothing in this clause 4 shall prevent the club from entering into other arrangements additional or supplemental to this. So effectively what that means is if you, the club, enter into an image rights agreement with the player's image rights company outside of the standard Premier League contract, then you can access additional rights. So you no longer need to use that player as the average of all first team players. You can use that player more regularly. And therefore, for the high profile players who all of your commercial partners probably want to be associated with, you've got kind of unlimited use of that player's image, subject to the terms you've agreed in the image rights agreement. And I think the other important piece on the separate agreement with the player under clause 4.11 is that you've got more control over how you use a player. Under the standard Premier League contract, I think you're limited to around 6 hours a week, of which half is for charitable activities. You no longer have those restrictions. So if you really, you've taken on a huge new commercial partner and you need to get your best players involved and you need to do something quite quickly, the separate image rights agreement really does allow you to do that. And without that in place, quite often players and agents can push back. We've just kind of sketched out an example here as well, again, just using the example of Marcus Rashford. When he set up his image rights company, we've assigned the image across to the company. The company now owns that image, and there are various different rights that can be licensed there. So there'll be a club agreement with Manchester United. So Manchester United can use Marcus Rashford's image in a club context and under the terms of that agreement, whatever it says, with the club's commercial partners. Typically, there still will be restrictions around personal endorsement. Usually when you're doing a shoot for one of the club's commercial partners, there'll be a minimum of 3 players involved. So you can see the picture on the top right. We have 3 players involved in that Aon commercial. And effectively, there will also be separate baskets of rights. So there'll be international rights. When Marcus Rashford's on England duty, you may see some England imagery in relation to some commercial agreements. And then finally, Marcus still retains his own rights in a personal context. So he can enter into his own deals with Pepsi or Beats or whoever that might be to endorse those products personally. In his Manchester United agreement, there may be some form of tie-in there. So there may be the ability to tie in personal and club context rights. There may be revenue share agreements in relation to payments for personal deals. So there's a lot of interaction between the different baskets of rights, which I'm sure Tom will cover. So I'm just going to hand back to Reece now, just on the player side.
Yeah, I just thought, Pete, we'd cover, you obviously talked through the UK image rights stuff principally there. I just thought we'd cover off the non-UK image rights and kind of where we are with that for those players we talked about coming to the UK with non-UK image rights, and perhaps having a UK, non-UK split in their image rights setup. So I've taken an example of Paul Pogba here, obviously one of Rashford's teammates. Now, say Pogba comes to the UK with an already set up non-UK image rights company that own his rights. Typically, you would set up a UK image rights company, and then depending on how prudent the player wants to be with HMRC's processes and or what they already have in place, if they already have loads of deals all over the world in place, you might set up a UK image rights company to hold the UK rights and a non-UK image rights company to own Paul's rest of the world rights. Now, how income is split between those two companies is where it gets a bit tricky and where we perhaps disagree with HMRC. So the first example I've got here is a nice, easy one. Paul Pogba, along with Messi, endorsed Lay's crisps. Now, Lay's crisps aren't obviously available in the UK, they're called Walkers. So any income that he or his image earned in relation to a Lay's crisps deal clearly can be attributed and should be done through Paul's non-UK image rights company. Slightly trickier situation would be Paul's Adidas contract. So he would typically come to the UK with an Adidas deal already in place, probably with his non-UK image rights company. How Adidas gain value from that image rights deal is sort of a question of discussion stroke attribution. Some of that work he does for Adidas will be in the UK, playing football in the boots, maybe doing some photo shoots. Some of that will be either photo shoots abroad, playing for France, perhaps away games in the Champions League. And the attribution between whether that income is earned by the non-UK image rights company or whether it relates to UK image rights and should therefore be documented as income in the UK image rights company and therefore obviously taxable to UK corporation tax in the UK is something that has to be split up effectively or attributed between those two companies typically. Now, where we come to argue with HMRC or disagree with HMRC typically is where clubs have got a club deal for UK image rights with a player's UK image rights company and a non-UK image rights contract with the player's non-UK image rights company. Obviously the UK deal taxable in the UK and the non-UK deal taxable wherever that country is set up. Now the example that's just flashed up here is Man United's deal with a lemon water, orange water company, which is the official isotonic drinks partner of Man United in Indonesia. Now, how that is attributed, we would say that's non-UK commercial revenue of Manchester United, and therefore, if Manchester United are paying for the non-UK image rights of Paul Pogba, that should be paid to his non-UK image rights company and taxable wherever that is abroad. HMRC, I don't know whether you want to add any comments. Obviously, I have a different view on that in that they think that if Manchester United are paying for those rights, that income is UK source income and all club money should be going to a UK image rights company and taxable in the UK.
Yeah, I mean, it's a fundamental disagreement that we and other advisors have with HMRC, isn't it? We believe you've got a payment from a UK club to a non-UK company for non-UK services. So it's the use of that imagery outside of the UK. it's potentially appearances on pre and post season tours. And, you know, we always look to attribute such that the UK services contract is at least as great and usually greater than the non-UK services contract. But it's clear that a significant proportion of that commercial income relates to non-UK, and that, you know, the use of the players' imagery in those commercials is absolutely key. But HMRC really don't like the use of offshore companies. They use this complex anti-avoidance legislation called transfer of assets abroad. And what they are simply saying now is it's a payment from a UK club, and therefore it's UK source. You know, whatever else you think is relevant, we disagree, and we're happy to go to the courts. They've even admitted to us that they recognise that it should be a multifactorial test. It's not just about the source of the income, but that's their starting point. And they know that players are quite reluctant to go to court, have their names in the public eye in relation to tax matters, which I fully understand. But fundamentally, we don't think they're right. And I'll just get off my soapbox now and pass back to Reese.
Yeah, I was going to say whether any of those cases actually get to court. It's a tricky one because we've talked about Sports Club, HMRC taking one of these cases to court and losing. HMRC don't really want to take a case, or in my opinion, don't want to take a case like this to court and potentially lose. But they also know that players don't really want to take a case against them to court, because player v HMRC in the media perhaps does more damage to your image and your potential commercial income going forward than the tax saving that you're seeking to protect. So in that respect, to a certain extent, watch this space, but I can't imagine anything's going to happen quickly. There's a bit of a standoff at the moment, I would say.
Yeah, the frustration on that one is I had at least one conversation with a club going back 4 or 5 years around establishing a commercial subsidiary in Guernsey or some other jurisdiction, which would then contract with all the overseas commercial partners and then pay the non-UK image rights companies and then bring the rest of the revenue back into the UK. So it would have made no difference to the club's tax position. It would have really helped this argument because now the income would be coming from a non-UK company. The reason the club didn't do it is because they didn't want a Guernsey subsidiary and anybody to think that they were trying to facilitate tax